So Tesla has been on a great run, and maybe, just maybe, the sleeping giant is finally waking up. Even Wall Street seems to be coming around to this narrative, but there's one thing that concerns me as well that could completely dampen all this and have Wall Street turning against Tesla and selling it right off again into oblivion. So let's see exactly what Wall Street's saying about all this, discuss it all, and I'll get you guys the truth on that and on my concerns with Tesla stock. Just make sure you like the video if you like getting the truth without the hype. Well, we all know Tesla's been on a great run right here, and this was bound to happen sooner or later. It's just kind of what Tesla does there. That's why you have to take advantage of opportunity whenever it comes up, especially with Tesla stock. That's why we bought at 169. That's why we bought at 141. That's exactly why we did those things, because trying to figure out when Tesla's going to do this or when Tesla's going to do that, or is it going in down into the hole, or when is it going to skyrocket, it's completely useless to guess. Sure, there's people out there that make predictions every week. Eventually they get it right, but then they're wrong the other 47 times. That's exactly what we try to eliminate from all that sort of stuff. Just buy when it's undervalued. It's so easy. Then you don't have to worry about anything else. And now when you buy it, for example, 141 like we did, you don't have to worry about it. You get to enjoy the fruits of those buys, and in this case, very short order, because Tesla just decides to move like this. And if you missed the opportunity of one of the biggest discounts ever for my group, it's been extended for exactly one more weekend. I got a bunch of emails asking, hey, can you extend it just a little bit further? You know, waiting on a few things to happen, whatever the case was, not a problem. I heard you. We'll extend it right here for 1 weekend. Make sure you check out the pinned comment, see exactly what you get. Check out everything you get with a membership there. And we'll talk more about that at the end. But we needed to jump into the video, so let's jump into the video right now and see what Wall Street's got to say.
Time for FOMO and no stock, eliciting that feeling more than Tesla at the moment. Alex Coffey, Ben Lichtenstein, and joining us now is senior markets correspondent for the Schwab Network, Diane King Hall, live from the New York Stock Exchange. Diane, Tesla has made, we were just talking about Apple making like a 1 in 100 like move. I mean, Tesla's making one of those type of moves this week alone.
It is. It is. I mean, shares of Tesla up more than 20% this week. I mean, we know the catalyst was the latest news on their deliveries.
All right. So let's keep in mind here, Tesla is prone to moves like this. We've seen bigger moves than this before in the past in regards to Tesla there. But yeah, it's been a while since we've seen this sort of move in Tesla this quick. So good to see that. I guess it matches the segment perfect. The FOMO segment, 20% move in a week definitely creates a lot of FOMO. But remember, we don't buy because of FOMO, we buy because of valuation. And then they start discussing that here a little bit as well. So let's kind of see what they got next.
What started out this ripple effect that's really been bullish for Tesla, where you have analysts after analysts changing their price target on the company after they did better than expected on second quarter deliveries, where they posted deliveries of nearly 444,000. So that sent a signal to investors and companies or analysts who had been critical of Tesla that it has been turning a corner. It is turning a corner. The latest news today, we have a local government in China that this is according to reports that have now included Tesla's Model Y among the list of EVs that it can buy as a service car. That has been one of the challenges for Tesla or any EV maker. The Chinese market has been difficult because it's going up against Chinese EV makers, and especially when you think about government vehicles, and the ones that had been allowed had been these Chinese car makers like BYD, NIO, etc. So now with them having the potential to penetrate that market with the Model Y, its best-selling vehicle, that is a boon for Tesla. Now shares were up.
Yep, I can't argue with that there. Where I get kind of tweak per se is when somebody tries to tell me how that right there somehow is going to extrapolate into Tesla creating, I don't know, another $1 trillion worth of market cap because the Chinese government's going to allow China, or allow the Chinese government in order now to buy Model Ys, one of the models that they can buy. It's not like they're going to go, oh yeah, screw all the other, Chinese automakers. We're only going to buy Model Ys now. And that's just kind of the way some of these narratives kind of get twisted and turned into. I think it's a very good positive. I think it's another solid thing in the story of Tesla in terms of continuing to grow, continuing to help deliveries recover, more importantly, because remember, deliveries are still down year over year, but it's not this crazy thing that all of a sudden makes it to where, $1 trillion market cap is very reasonable, or whatever the heck all the crazy bullish narratives that kind of go on around Tesla go on around. It, to me, is just another positive sign, another signal of strength, but it's underlying strength. It's not something that's going to add trillions of dollars to the market cap or, all of a sudden make the multiple go, jump, double up because, now all of a sudden the Chinese government says that they can also buy Model Y, or Model Ys were added to the list of vehicles they're going to buy. It's just not that huge of a catalyst there, but that kind of seems to where we jump with Tesla all the time, is we can't just, kind of deal with small things that are awesome for the stock and great for the stock long term. Just can't seem to be that way. We just have to go way high or way low. There kind of seems to be extremes with Tesla.
Higher earlier in the session, so it's been a little choppy now. But again, this has been a strong week for Tesla, with the stock up more than 20% in response. Alex and Ben?
Yeah, Diane, I'm not sure how much of this is really good news that's come across the wire for Tesla over the last few months, or just Elon Musk not selling shares anymore. I mean, it came under pressure as he was unloading last year into the beginning of this year. But, what stood out to me, and you touched on that, was these numbers better than expected, but still quarter over quarter, they were down, right? So the second quarter in a row.
It was.
And correct me if I'm wrong, but Tesla now, they haven't seen that since 2012, I think it was, 2 quarters in a row of declining sales numbers, basically since they discontinued the Roadster. And then the other thing that stood out, and as you did mention, is, again, the numbers better than expected, but Chinese automakers, their competitors, they actually saw better than expected and quarter-over-quarter growth numbers.
Yeah, now that's a fair bearish point pointed out by that analyst there, and it's rare that we get something that is actually fair or at least reasonable, both sides there when we're talking about Tesla, but specifically on the bearish side. It's true, yeah, you're down year over year for the second quarter in a row. That has been a rarity. Again, people saying, oh, poo-pooing on Tesla's deliveries when they were record deliveries, once again for Tesla over and over and over again. That's one thing. That's the stupid bearish narrative. Somebody pointing out something like this makes sense. It's an actual legit bear point. Now, that doesn't mean Tesla stock's going to zero or anything like that. He didn't say that either. But it is a fair bearish point in regards to Tesla. Secondarily, the fact that other Chinese automakers were having delivery numbers spike up significantly, and where Teslas were kind of still down year over year, does speak to something. Now, of course, Chinese automakers tend to be concentrated just in China. Specifically, that's where the vast majority of their sales come from, as opposed to Tesla, obviously, is a global brand, obviously, a lot of sales here in the US as well. So you're not comparing complete apples to apples there, but you're definitely at least in the ballpark in terms of being reasonable on the assumptions there. Now, am I concerned? No, we knew that this was coming. We knew that the number was going to be low. We knew that demand was slowing. And this is just kind of part of that cyclical nature of the car industry in general that some people thought Tesla was immune from. They're not. That's been proven out. Anybody saying that that's not true is simply ignoring the data, and you need to kind of consider that person's motive at that stage. But they have. But that also does not, and obviously China's environment is completely different, where they have a government mandate where everything will be by 2030 EV, and so of course that lends itself much more to them continue to just set numbers year over year over year, as they, hey, we're 5 years away from that, or 5.5 years away from that mandate there that the Chinese government has put out. And it's not like other mandates where that'll get extended and such. Chinese government operates differently, and if they say it's going to happen, it's going to happen. And of course, that also means Chinese EV production is in full throttle as they start to replace, it's a giant country with a lot of people and a lot of vehicles to replace. And so both those narratives kind of make sense there, but it was something I want to hopefully emphasize to you guys, that when a bear is being reasonable, and again, that doesn't happen often, but when they are, in the instance of this particular point right here, it's definitely worth at least weighing. It doesn't mean that you shouldn't buy Tesla or anything else like that, but it definitely means it's an actual legit point there that you have to consider.
Right. So look, so part of it may be better than feared. That may be some of it in terms of the response, right? Because as you mentioned, it is a decline when you look at the sales on a year over year basis. But analysts believe differently. They believe this is a turning point, and not just because of Tesla sales, but there has been improvement across the landscape when you look at EV makers, because across the board, even with the Chinese automakers had been engaging in a price war to sell vehicles, but again, they've been performing better than what the electric vehicle space has been recently, and the anticipation for where it's going. But I want to point out, for instance, Wedbush put out a note with regard to Tesla and where they see it. They say they see it as a turning point. They see the key for Tesla in terms of how the street receives it is this upcoming Robotaxi day, which is August 8th, right? They believe that will be a historic day. They think that is the key to reaching $1 trillion valuation for Tesla, with the autonomous and the FSD vision just being executed. They think that will take hold with this Robotaxi event. So they believe in a bull case scenario. They raised their price target on Tesla from $275 a share to $300 a share. They did acknowledge it's been a choppy start to the year. We know that it's been difficult for Musk. They see that this is a major turning point in the Tesla story. B of A also had some similar thinking in that they believe that the increase in just the affordable offerings, we know there's been some price cuts, and that's helped to move some of these vehicles, and that they believe that'll drive volume.
Any final thoughts on this one?
So really not spectacular takes there from the two different analysts that have price updates there. Obviously we know Wedbush, Dan Ives specifically, super bullish, overly bullish in a lot of ways, and that's okay. There's nothing wrong with that there. In terms of trading activity, could the Robotaxi event be that? Yes. Are anybody building in any of that sort of stuff into their models unless there's actual guidance given on the event, and then obviously followed up on the earnings call? Nobody cares in terms of that. The event itself like that. It's another Tesla event. Most of the events in the past have been really, really neat, have been exciting for us as shareholders, but have not necessarily bared fruit in regards to profits to the bottom line there. And so that's kind of what people are going to be looking for there in regards to that. Like, is this going to be another show where we're years away from this actually coming to fruition, or maybe still years away, still waiting for these things to come to fruition? Or is this something that they're actually going to be willing to guide to, so we have an idea as to how to price this into the stock at this particular stage? Remember, Wall Street stinks in terms of kind of, if you want to give them best case, their longest case is maybe a year out, maybe if we're lucky there. Really, it's quarter to quarter there. So are they going to trade it? Absolutely, they're going to trade it. Which way that trade's going to go, who freaking knows? Probably depends on how much it runs in the meantime. And then, because it's a trade, that trade can quickly flip on you as well the other direction. It's not like it's a bullish long-term narrative. It's very, very much a short-term narrative, unless we get some sort of guidance coming, in regards to, and I mean actual formal guidance in regards to, revenue, profits, margins, things of that nature, and more importantly, timelines for all that sort of stuff to actually come in and start hitting the bottom line there. If we don't get that, that's definitely make it more of the, hey, we're going to trade it, and which direction they trade, who knows? But it's going to be strictly a trading event at that stage, which is not a long-term catalyst for the stock.
Before we let you go, I mean, this has been a historic move, but you look at those charts and it's still nowhere near even where it was a year ago. It's just absolutely incredible the amount of volatility you see in this, Diane.
It's true. I mean, when you look at it in terms of a year-over-year basis or even a year-to-date basis, it still has a lot of ground to cover in terms of reclaiming, some of the action that we saw a year ago in terms of Tesla. I mean,
so take a look right there at the chart. I didn't mean to cut her off there, but when I look at that chart, that tells you why valuation is so important and why being disciplined with your investing is so important, and taking what the market gives you, especially with a stock like Tesla. I mean, I think virtually everybody has been talking about now for over 4 years that it's the most volatile, crazy moving, mega cap, large cap stock, anybody's ever seen. I know I've been doing this for 25 plus years. It's absolutely bonkers how it moves. That's why you have to be disciplined, because I see over and over and over again times when it's beaten down significantly and it just looks like there's no bottom coming, and then out of nowhere it just rockets straight up. That you see that repeatedly in that chart. And that's why valuation is so important, to keep you from buying those things when it just looks like, oh my gosh, this thing really is going to go to the moon like everybody's saying, and instead buying when it's down, in $100 range, when it's down in the 140s like it was earlier this year. Think about that. Think about how, I know for myself personally, I bought 103-ish or so, and then I didn't buy for over a year, because you can kind of see exactly what the chart did. It was kind of basically just a straight up line there from that bottom. Looks like we got a little bit of a dip there, and it just kept rocketing up. And I didn't buy again until we got down in that 169 range. And then I bought again, at 141. And obviously we see another massive move up again. Now, do we come back down? Who knows? I don't know. Obviously chart masters there can jump in there and, tell me what the charts say. But I just know if you stay disciplined throughout that timeline, and especially as a long-term buy and hold investor. Now, if you're trading, this is completely different. But as a long-term buy and hold investor, I look out in terms of years, 5 years, 10 years, decades out, because I understand that's my investing journey. You know, I'm going to hopefully invest until or hopefully I live till 80. So then I'm investing till I'm 80. So I need to keep those sort of things in mind and understand that, hey, I can see right there in that chart, you were given several opportunities to add at great valuations, not necessarily the best pricing ever, but at great valuation pricing. And that right there is the key to not getting stuck with Tesla, to where there's folks who have not made a single dime on Tesla and, you know, going on 3 years now. And that's a tough pill to swallow. Or 4 years, I guess, really, depending upon where that spike is right there. You could still be sitting in the negative at that stage. And that's really, really, really tough to be sitting in a negative on a great company for 4 years. That's very, very, very tough to do. And that's where learning how to do that valuation is so key. I can't emphasize that enough, guys. That right there, that chart shows you exactly what you got, especially with Tesla as compared to a lot of other stocks.
I would say that it's been the case before where we've, kind of counted out Elon Musk. It's hard to count out Elon Musk. Now, to be fair, his attention is often divided between multiple companies. So that's one of the challenges when it comes to Elon Musk. Can he master Tesla recovering amid, all these other companies that he manages? In terms of where it is now, it looks like the analyst community is on board with the progress.
Good stuff. Diane King Hall, appreciate it. As always, senior markets correspondent for the Schwab Network. Have a great.
All right. So we'll go ahead and stop it right there. In regards to him being able to divide his time, he's been doing that for years. I don't have any issues with that. We can say maybe he bit off a little more than he could chew with Twitter initially. Obviously, the selling in order to purchase it in the first place was really, really what hurt the stock. And then, of course, all the other kind of crap that kind of came around it. I'm not going to rehash that again. But in regards to my own personal feeling on his ability to do it, he's been doing it for years. I have no reason to think that he cannot continue to do that into the future there. So it's not a concern for me. But what I do have a concern with right there, and this is more important, what I have concerns with Tesla stock price in the short term. Long term, I don't have concerns. In the short term, especially with this latest run, is it is not based upon earnings. It is not based upon anything that would actually cause the valuation to move up. It is based upon a lot of speculation, a lot of hype, a lot of momentum, a lot of other things like that. And if earnings comes and if that EPS is not growing, guys, that's the biggest thing I'm looking at there. That EPS is not growing because they had to trim margins even further with some of the incentives and some of the price cuts and some of the other things that they did in order to get more cars out the door, just to stabilize deliveries per se, kind of give us a bottom there on deliveries. That means that EPS number is not going to be as high. Yes, hopefully they make it up in some other areas. Of course, the Elon sometimes can pull rabbits out of the hat there. But if we don't see that go up and we don't see those margins improve, you're going to see that stock get beaten down really, really, really quick, because the story of is it over, is it not over, is not going to be there. And it doesn't matter, and again, barring some sort of crazy like, hey, FSD is going to get solved in the next 6 months and robotaxis are all rolling out in force in the next 6 months, and they give us actual guidance for the robotaxi network, for FSD. And I mean actual tangible guidance. It's going to add X amount of dollars. We are now guiding to X amount of revenue, X amount of bottom line profits coming from that particular network. If they say that, that's a different story. But if they don't say that and they just kind of mention, oh, robotaxi is coming, it's going to be great, it's really, really, I think it's going to add $1 trillion to the market cap or something like that. That's not formal guidance. That's not going to help us out any, especially if those margins are eroded and that EPS number comes in low. So that's exactly what I'm looking for there. It's not necessarily the revenue number nearly as much as I am that EPS and those margins, because that is what is determining the Tesla story right now in regards to the stock price, and more importantly, in regards to valuation. That right there is what is determining the valuation of the stock. If those EPS numbers continue to sit low or flat or stagnant, that means Tesla is trading really, really rich right now. And of course, especially the large institutional holders are just not going to be a buyer at Tesla at these levels. And I could see that momentum going the other way. And if you don't know how to do a valuation, guys, it is critical that you understand how to do that. That's exactly what we teach in our group, which is that one of the biggest discounts ever. I gave you guys an extra week here to try to jump on that. Jump on it. Jump in there. Hey, if you want to jump in, learn it for a month, 2 months, whatever the case is, and jump back out. Totally cool with that. It doesn't matter. I want you to understand exactly how to do that. And along with that, you get all my buy and sell alerts at real time. You get access to free coaching. You get access to the best 6, 7, and 8 figure Discord out there, my complete watch list with price targets. We have so much more coming to the group, guys, and there's so much involved in there. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.